We are even I can trade. You will be assimilated. Your trading knowledge and distinctiveness will be added to our own. You will click the like button. You will subscribe to this channel. You will share this content with at least one other friend. Resistance is futile.
What's up, family? How is everybody doing? We are back for another one. Today is actually January 19th, and I've got a packed one here for you today. I'm going to try to squeeze a lot in, but first I want to talk about what I want to talk about today. And I don't know if I'm probably not going to get all of this in. I really want to keep this video under 30 minutes. So I might break all of this up, but what I want to talk to you about is recapping today and yesterday, because it's been a crazy set of days. I actually recorded video for yesterday, but I didn't get to finish it. It just got too busy. But I want to recap that. I want to talk to you about all these recession fears out here. Really, what is a recession? What is the technical definition of a recession? Because if you're like me, when you hear recession, you think, uh-oh, but is that really the case? I want to talk to you about this concept called profit expectancy. I've been touching on it a little bit, but I want to go a little bit deeper with that because a lot of professional traders pay attention to this number. I want to talk about the low volatility trap, what that is, what to look out for, why it's a trap, why is it bad, all of this stuff, and how to avoid it, what to look out for, how I stay calm risking money. I got this on a YouTube comment and I thought it was an interesting question, so I wanted to dive into that a little bit and talk about some of the Discord updates that I've added to Discord, trying to give you as much value as possible. So I want to go into as much of that as I can fit in the next 30 minutes right after this.
Your assimilation to the collective will begin by joining the Even I Can Trade Discord. Link in the description of this video. You will join a tier based on your distinctiveness, or you will join the general area with no economic impact. Excuses are irrelevant.
All right, so first things first, I want to talk about the last 2 days recap. Now, like I said, I filmed some footage during yesterday, but I really didn't get a chance to finish it. So I think I'm going to try to squeeze in everything just in this video. But if I have to, I'll go back to that other footage. Yesterday it felt like absolute carnage. It was honestly kind of funny. But let's zoom into the 18th and see, because it really started out positive. It was just a nuts kind of day. And early on in the day, there was absolutely only one indication that it was going to turn negative that I could see. I mean, maybe somebody else saw something, but I saw there was one thing that stuck out to me that made me raise my alarm bells a little bit, and thank God it did. But the day looked like this right here when we started. I mean, it gapped up. It was a gap and go. And for those of you who don't know, a gap and go is when the market gaps up and it stays up. The market seems to almost always want to eventually fill gaps. And there's another gap later or earlier that was filled that took almost a week to fill. But gaps are like zombies. they just always come back from the dead at some point and get filled. But it started to look like it was going to be a gap and go. The market was trending up on, it didn't pop up on the open too bad or anything like that. But I mean, we had a whole bunch of green bars. The internals were looking nice. They were looking green, except for one. And let me see if I can get that pulled up here. And that is going to be over here. Our put call ratio right here. Let me blow this up. So this is Wednesday, and what I saw coming into Wednesday was this. in the morning. So this is 9:30, 9:35, 9:40. And it was very exaggerated, the Zoom that I had. Oh God. The Zoom that I had, it was very exaggerated. But all the other internals were pointing to a green day. Now, if you know the put call ratio, you know this is very bearish, very, very bearish. Basically, the higher this goes, the more puts there are compared to how many calls there are being traded. So a lot of puts, people were very, very interested in puts very early on in the day. And you can see the market didn't start pushing down. Let me see right here. Yeah. So the market didn't start its push down until 10:15. 10:15. So this is all morning. The market is going up, but right on the open, 9:30, 9:35, 9:40, the market is interested in puts. So I saw that and I was like, that doesn't fit. That's weird. It started to trail off a little bit, but it stayed elevated, right? And I was just like, that is so weird. Why is that up when the rest of the internals are signaling, good times ahead? So let me see if this is going to let me show you Wednesday morning. I might have to blow this up. So the tick was looking good. Did you see where's Wednesday? There we go. So Wednesday, the tick was above zero. It didn't even go below zero until 10:15, but the tick was elevated all day. The AD line was up. Everybody was looking good for a very bullish day. Here's Wednesday right there. So you can see the AD line was way up. This is very unusual action for the AD line. And then volume also, you can see it was just increasing right until that 10:15, 10:20, 10:30 time frame. And then it fell off a cliff. This AD line, good, fell off a cliff. This, the VIX. Now, oh yeah, right here. Nope, yeah, this is Wednesday right here. So the VIX was lower. The VIX was below 20, and then all of a sudden shot up. So there were no indications at the time except for this that were like red flags. But I did take note of this, and I think I recorded myself saying this at the time. That's why I wish I could. I wish I really should put those videos out, but it's just too much information. I recorded myself at the time saying, yeah, this is kind of weird. So what I did, I'm kind of a contrarian at heart. So first thing I did is I got into my call. So this is my call spread that I got into. I got into a 40-45 call spread. Mark was at like 4,000. I knew that the market was going to struggle at the 4,000 level. I mean, it's the most obvious thing in the world. Like, this is the strongest resistance like ever right here. So, I mean, everybody knew that the market was going to struggle at 4,000, but we thought it was just going to kind of trail around and play around at this level. So, I wanted to be nice and safe. I could have gone a little bit lower, but, it's like if it did, in the back of my mind, I was like, it's a very bullish day. If it does, break through 4,000 for some reason, it's probably going to go. It's going to shoot. Because this is a very psychological level. Like, everybody's looking at the 4,000 level. So if it breaks the 4,000 level, I mean, it's off to the races. So at the time, that's what I was thinking. So I was like, let me play it safe. Let me get a good amount of space, do my normal thing as far as getting away from the market. So I placed this trade on this second little green bar right there. I like to do my calls on a green bar if I can. So waited for a green bar to pop so I can get the best pricing, got in there nice and, at a decent time, 10.25, whatever. And on the next bar, I mean, the market just absolutely rolled over. And I mean, it didn't feel like it on the first bar. It didn't feel like a rollover till it broke kind of like, maybe this third bar right here. But it just started to tumble right on over. And that's the day. So On the put side, I had a couple of trades in here and I almost got into some trouble. Now I said this in the chat at the time, which I have to go find that conversation. Let me see if I can find it real quick before I spend too much time. Let me see. Was it right here? Yeah, no, yeah, right here. So my first trade on Wednesday, I think, yeah, 17th. Was it this one? Yeah, so I traded a 39.55 put. And that was around 12:30. So let me make sure everything, this doesn't look right. Is that the same? This is a different day. Yeah, this is a different day. Dang, I get my days mixed up. That's 17th. The 18th, this is what I'm looking for. Let's see. Oh, I see what happened. Okay, I forgot. So I traded a put very, very early when I saw the gap up. So what had happened was we had the PPI data come out, and I was able to get pretty distant from the market. Like it was like 50 points away from the market, which is a decent amount away from the market, especially because I was looking at the internals at the time and thought everything looked good. So I was like, let me just go ahead and take a risk. Let me go ahead and take a chance. So I chanced it and got into my put, and everything was fine. And then got into my call after that. Yeah, there's my 40.45 call. So at 11:11, that's when I saw the market start to roll over. Now, normally I would have stayed in the trade a little bit longer, but I closed the trade at 40 cents. Now I collected 20 cents on the trade. So I closed at a 1-to-1 ratio. And I closed it early because in the back of my mind, I remembered seeing that put call ratio through the roof. So convention would tell you to close at a 2 times or a 3 times your profit number. So close at like 60 or 80 cents or something like that. So 1 times would be 40 cents, 2 times would be 60 cents, and 3 times would be 80 cents. But I closed at 40 cents. So I closed this early because I saw the market start to roll, and I remembered that put call ratio was looking very funky. So I closed out of it. I said, I don't want to mess with it. Feels like the market's starting to roll over. Let me just get out of it. It's a small loss. I can make up for it super easy. And then I just left it at that. And then I was like, for me, let me see if I can catch a falling knife. But you don't do this, right? So I got back in the market lower at 39.35, tried to hang out, and that took me out. And I just got taken out. And I was like, okay, that's it for, even if you were more aggressive, stop right here, because you have to start thinking about pattern day trade. And this would be 2 day trades. And you only have 1 left for your 7-day week. And you don't want to be caught sitting with 1 day trade for a whole week if you're on pattern day trade rules. So if you did this second one, stop and cool off. Don't even trade for the next couple days or whatever. Just leave the market alone. Let your day trades reset because you're going to need them, and you don't want to risk getting into that pattern day trade situation. So, I got taken out of this one for, I think it was like 85 cents. So I got 45 for it. I left it at 85 when the market continued to roll over. So that was like a 60 cents L on the day. And then after that, I did another trade that I didn't even post because I didn't even want anybody knowing that I did that trade, because it was just like, just don't do this, right? But I was trying to test out a few things. I just wanted to see something, right? So I did this last, not this one. This is the other one that I got out at 85 cents. I just left this one up there. I did the last trade that I did. I think I did at 39.30. Yeah, 39.30 was the last one that I did. And it was closer to the end of the day, and even that one got taken out. And I closed that one out early too, so I didn't lose too much. So basically, the moral of the story is yesterday I lost a total of 35 cents after all it was said and done. A total of what was it? $70. 70 cents total I lost yesterday. So that was the first L on this journey to grow $500. I got most of it on film, like I said, so I'm trying to summarize from memory, but I've got most of it on film, but lost 70 cents for the first time yesterday. So it is what it is. I actually didn't lose a total net of 76 because I still had my trade up here that I had a profit on for whatever it was, 15, 20 cents. So, but we took a net L yesterday because the market was just that crazy. And if I followed my rules, number one, I wouldn't have gotten to that the first trade in the first place, because I don't like to trade until like around 10:30 anyway. So if I waited, I probably would have started to see the market roll over anyway and waited for all of this. And then the second lesson that you should learn is to wait for that measured move, denoting that the trend has either stopped or shifted or turned around. Measured move being a higher high and a higher low, not necessarily in that order, but you need both to confirm that the trend has stopped or lifted or whatever. And we did not get that here. We got low after new low after new low. The only higher low that we got was right here. This is the only higher low. Let me exaggerate that a little bit. So we got I don't even know if I want to consider this a higher high, just because I'm not sure if you want to consider this a high. It's debatable, but we definitely got a higher low right here. But you can see we got a lower high right after that, a lower low, a lower high, a lower low, and it just kept going. Now, what you could do right here is, if you were in a call spread, you could chase down your call spread. So what I could have done, and a reason why I did all of these put trades right here, honestly, is because I was trapped in the day, because by the time I thought about closing this out, because I was so caught up looking at the puts, by the time I was like, let me close this out, it was already at zero with no bid. So I could not close this trade because there was nobody to be on the other side of the trade. So this trade, even though it was sitting at zero, meant that I could not roll to another day. I could not do anything but trade more that day because I didn't have enough collateral to support another trade yet, another contract. So had I closed this call out, I might have rolled to a different day or something like that, which is still debatable because, I don't have enough collateral to like add contracts and stuff like that, but I would have at least had the option to. But since I didn't close this trade out, the only thing I could do to compensate for the day was to try to get in lower on the same day. So one thing you want to try to make sure to do is close out the opposite side of your trade. Another thing I could have done is to close out the short leg of my put spread. And had I done that, I would have made a lot of money if I was able to. You're not always able to do that because that costs collateral, which you may not have. So you have to put it in the trade setup and see if you have enough buying power to close the short leg. But if you do, if you have a day like this where the market just absolutely rolls over, you can collect on that long put leg and let that do the collecting for you and just close that out later. But like I said, I couldn't do any of that stuff because I just didn't have enough money to do it. So the only thing I could do is put on new put spreads for the same day. So that's what I was trying to do. That's really why I didn't want anybody else to see it and look at it and do it. because those aren't good options, honestly, especially on a rollover day like this. But that's what I did. So I tried it and it didn't work. But it also shows the power. It really does show the power of closing your trades early when they start to get into trouble, keeping your losses small, right? Because this would have been a $500 loss or $490, whatever it was, $480 if I sat there and did nothing. Because my first short leg was at like 39, I don't know, 45 or something, 55, whatever, up here somewhere. And it would have blown that out halfway through the day, right? But I closed it early when it was like alarm bells, something like that. Okay. So keeping your losses small, paying attention to the price action, paying attention to the internals, pays off. Okay. So I was able to take 3 L's and still keep all 3 of those L's small. Now I would have triggered the pattern day trade rule, but I couldn't make a single other day trade without triggering the pattern day trade rule. You get 3 and I used 3. So a number 4 would have actually put me in PDT. So that's why I didn't even advertise the third one that I did. Anyway, that was that day. The next day, right here, that's today. I didn't really get to record at all today because I was working, but we gapped down right here and continued the attitude from yesterday, basically. And I called this too. I don't know where I've got it in. You can see it in the Discord, but I called this too. I actually said we're probably going to zigzag until February between highs and lows because of this long-term support and resistance. This resistance, this support, right? And the market is going to get squeezed inside of here like a crab crusher, like a nut crusher, or whatever you call them things. The market's just going to squeeze itself until it picks a direction to go. So after this got knocked down like Mike Tyson, now we're dealing with the low side here. And now you can get a little bit more aggressive on the puts. So today, here are my trades from today. Now I got into a call a little bit earlier. Well, not 10 o'clock is okay. So I got into a call about 10:05 and I got into a 39.50. The reason why I picked this was because it was above the gap and I wanted to try to be above some resistance lines, some areas of resistance right here. So this is one area of resistance, the gap. The next would be this low right here. This would be an area of resistance. The next would be these highs, one of these highs right over, pick whichever one that you want, like this general area. And this is as high as I can get where I'm up into this resistance area. So I've got a couple of blockers in front of me. And I've got distance. So at the time, this was like a 50 pointer, something like that. 50 points away from the market. So I've got that distance in my way as well. And I've got market sentiment on my side. So very negative, very bearish open. Now that didn't work for the previous day because we had a bullish open. So, I mean, you could take it for what it's worth there. But you do have that on your side. It's not like it's meaningless, right? Especially after a super, super bearish day, it's unlikely that we're just going to erase all of this bearishness but in the next day, right? So once the market picks a direction, that's good for us because we have a little bit more clarity in our trading to say, okay, the market feels very strongly this way, so I can play off of that. So I played off of that, got into a call spread and put that one in. A few minutes later, I saw the market start to roll over a little bit and wanted to go ahead and get in while I had some premium, while the expected move was decently high. I think at this time, the expected moves around 25 points. So that means we can definitely get 50 points away again, as well as we have this gap right here between our trade positions, which I like having that gap right here. So we got the gap, we got a nice long distance, and I went ahead and took the trade. And this trade was a 38.45. So that gives us like a 105 point spread between the iron condor here. And today is such that it was just a great iron condor day. Great iron condor day. So we won on both sides. This was a total of $50, I believe. Yeah, $50. So basically we got our money back from yesterday. So we're already sitting at, where we started, pretty much after taking basically 3 losses in a row, kind of. And that really is the power of just keeping your losses small, because we have such a high win rate. We have such a high win rate that as long as you can keep those losses small, you're going to win way more often than you lose, to a point where you can almost count on it. And you're going to get the money back, and you're going to get it back in small chunks. So if you try to lose in small chunks, the math works itself out, right? So that's what we're trying to do, and this shows it, right? So we're sitting at 905 right now, and we'll see what happens tomorrow. So calendar wise, this is Wednesday, right? This also kind of struck me as odd, right? So this is normally bad for the market, and we knew these numbers. This is at 8:30, 9:15, all this kind of stuff, right? All of this stuff is normally pretty bad for the market. Market doesn't like to see this stuff, except for now where we're in this topsy-turvy Fed world, where the Fed wants to see bad numbers, so they start raising rates. So it's like, okay, the market likes, the Fed to calm down rates more than it dislikes bad economic news at this point, because the Fed wants bad economic news to stop raising rates, to say, we've caused too much damage, we need to slow down, I guess. So it's weird to really, you don't know how the market's really going to take stuff. You just don't right now, right? We could see unemployment shoot up and the market would go up on that. You know what I'm saying? Because it's like, the Fed might start raising rates now. It's just like, it's almost like the market is telling the Fed, stop beating us up. Stop hitting me. I get it. I'm sorry. But it's just a weird world right now. But I guess the market decided, you know what? F that. I don't like these numbers. It just started going down. I don't know, man. But today, let me see. We got unemployment claims. This is actually a really good number, honestly. Unemployment claims came in lower than expected by a decent bit. This, you gotta watch. This, I'm pretty happy about this housing start number. But you gotta watch you gotta watch the housing market numbers, especially with these rising rates, because you got a lot of layoffs in the mortgage arena, with mortgage salesmen and stuff like that, because they're not selling as many loans. And that's going to have a downstream effect, because people aren't buying as much houses. Maybe it affects certain segments more than others, like maybe the larger homes and stuff like that are still buying, but the smaller buyers definitely are not. We've got building permits, building starts lower than expected and lower than last month. So this is slowing down. You got to watch this. Keep your eye on this. And that's pretty much it for the week as far as announcements. Next week, we got a little bit of PMI on Tuesday. Let me see. We've got GDP. This is going to be really interesting to see on Thursday. And then some more inflation stuff on Friday morning.